Welcome to the deep dive. Today we're jumping into a really interesting document. It's the draft red herring prospectus for Oravel Stays Limited. You probably know them better as OYO. This one's dated September 2021.
Yeah, and our mission here is basically to pull out the key stuff, the important insights from this, pretty dense financial filing.
Exactly. Give you a shortcut to understanding this major player in global hospitality without wading through hundreds of pages. Let's get into it. So OYO. Most people have heard the name. The formal journey, though, it started as Oravel Stays Private Limited. That was back on February 24 in 2012 in New Delhi.
Right. And then fast forward a bit to September 14th, 2021, and that's when they officially became a public limited company.
Oravel Stays Limited. And they also moved their registered office to Ahmedabad in Gujarat around then.
And the filing clearly names the key promoters, too. You got Ritesh Agarwal, of course, then Hospitality Holdings Cayman, and SVF India Holdings also Cayman Limited.
So what's the core idea here? How do they actually describe themselves in this document?
Well, what's really telling is they don't just say hotel chain. They call themselves a new age technology platform.
Yeah.
Their whole thing is empowering what they call the large yet highly fragmented global hospitality ecosystem.
Fragmented. That feels key.
Definitely. They help patrons, that's their term for property owners and operators, transform these unbranded properties, turn them into branded, digitally savvy storefronts that can potentially generate more revenue.
Makes sense. And for the traveler, the customer.
For the customer, it means access to a wider range of places to stay, short stay accommodations, but with some level of, quality control and standardization. They're trying to professionalize that whole segment.
And the scale of this opportunity they're chasing, the numbers mentioned, especially from this Red Seer report cited to the prospectus, are just huge.
Oh, absolutely. They project the total global short stay market hitting, US $1.9 trillion by 2030?
$1.9 trillion. That's massive.
It is. But here's the really interesting bit from Red Seer, I think. They estimated that back at the end of 2019, OYO's platform could potentially have empowered 54 million storefronts globally.
Wow. 54 million. So it's not just a big market, it's this enormous sort of untapped potential for them to digitize.
Exactly. Standardize a huge chunk of global hospitality.
So connecting that potential to their plans, let's talk about the IPO itself. The prospectus calls it a book-built offer.
Right. That just means the final share price isn't fixed beforehand. It's determined by investor demand during the offering process. They were aiming to raise up to $84,300 million, which based on the exchange rate then, was around US $1.14 billion.
Okay, a significant amount. And how was that structured?
It was split in two parts. There was a fresh issue of $70,000 million. That's new money going directly into OYO.
For growth and operations, presumably.
Yeah, exactly. And then an offer for sale of $14,300 million. That's where existing shareholders, like early investors, sell some of their stake.
Got it. And did they say what the fresh funds were specifically for?
They did. About US $330 million equivalent was earmarked for repaying some borrowings their subsidiaries had. And another big chunk, $29,000 million, was set aside for growth, both organic, like expanding their network, and inorganic, maybe acquisitions.
Okay, so vision, market size, IPO plans. That's one side. What about the financials leading up to this, the actual performance numbers?
Well, the prospectus shows some pretty significant swings.
Yeah, I noticed the revenue from customer contracts took quite a hit. It dropped from over $131 billion in the year ending March 2020.
Down to just under $40 billion for the year ending March 2021.
It's a big drop.
Huge. But interestingly, their restated losses also decreased quite a bit in that same period.
Right, from about $131 billion loss in FY20 down to roughly $39 billion loss in FY21.
So it definitely paints a picture of a company going through some major financial shifts, perhaps reflecting the pandemic's impact on travel, maybe cost-cutting efforts too.
Which brings us neatly to risks, doesn't it?
Yep.
Any investment has risks, but what does the prospectus explicitly say?
It's pretty standard but important language for an IPO document. It states clearly that investing in equity involves risk. And specifically, it says, and I'm quoting loosely here, no assurance can be given regarding an active or sustained trading in the equity shares.
Meaning the stock might not trade much after listing.
Or regarding the price, it might go up, it might go down. They highlight the inherent risks of being the company's first public issue.
So buyer beware, essentially. Standard but crucial for anyone looking at investing in these kinds of potentially disruptive tech companies.
Absolutely. It's volatile territory.
Okay, so that wraps up our deep dive into OYO's 2021 draft red herring prospectus. We've seen a company with a really big vision for hospitality,
Backed by a truly massive potential market.
but also one navigating some serious financial headwinds as it prepared to go public.
So maybe a final thought for you to chew on. Given OYO's whole strategy using tech to reshape this fragmented industry, their journey from big losses towards an IPO, what does that tell us about how we should even think about investing in these high-growth tech platforms? And maybe how do we measure success when it's not just about traditional profit, especially in these businesses trying to fundamentally change things?
Great question to ponder. Something to think about.